So I would rather win in a volatile fashion than lose slowly in a non-volatile way. On August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P, and the ones that outperformed us, you could have guessed, are like energy companies, and they were selling oil when oil hit $0 a barrel, and their stocks smashed back. I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest, and just don't lose it and don't bother us. But when we embraced the Bitcoin strategy, we did it because we knew that if we held our cash in a bank account, it was going to lose 20% of its purchasing power per year. And it has, as predicted. The money supply expanded by 40%. Single-family homes in the U.S. have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago. We've been planning to do this for 4 years. So I just think we got caught up in some very colorful media. You may know, most people don't. I'm the controlling shareholder of MicroStrategy. I have 68% of the voting shares. And I started the company 33 years ago. So I've been the CEO for 33 years. I'm the chairman of the board. I'm the controlling shareholder. And I've been talking about Bitcoin for 2 years. And about 2 years ago, we promoted a gentleman, Phong Lee, to be the president of the company. And he was the president and the CFO. So he's been running the day-to-day business hands-on as the president for the past 2 years. And 99% of the activity of the business is selling software. So we have 2,150 people. We sell software, we make software. We have thousands of customers. We do thousands of transactions a quarter. We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. It turns out that once a quarter we do a Bitcoin transaction. I don't need to be the CEO in order to oversee the Bitcoin side of the business, because I can do that as the chairman of the board and as the chair of the investments committee, where we provide oversight for Bitcoin acquisition, and maybe once a quarter we might do a big deal, like borrow $200 million or issue equity or something, or we might buy Bitcoin, but it really is something that can be best supervised at the board level. And the path for Phong to be CEO has been set in stone. Well, it's been set for years and years. He was promoted to Chief Operating Officer in 2018. And he's been the CFO of the company since 2015. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking indefinite intangible charge in our Q2 results. That by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just that GAAP accounting doesn't let you write up your assets. If you're positive, you just say, okay, well, this is normal succession and appropriate corporate governance. If you just want to write something trollish, you would pair the non-cash write-off with me taking the executive chairman role. But obviously, it has nothing to do with that. It's always been the plan for me to be executive chairman. We don't run the company based upon Bitcoin volatility. And we don't run the company based upon indefinite intangible accounting charges. That would be putting the interest of our shareholders after the optics of a random troll. We run the company based on what's best for the shareholders and what's best for the employees and what's best for the customers. Because Fong was the president and CFO, and you can't have a public company where the CEO is also the CFO. It would be inappropriate to do that. Like, only in the most dire of circumstances would you ever do that. So when Andrew arrived, we wanted Fong to be CEO, and the accounting charge is an intangible non-cash charge. It really, again, as I said before, Bitcoin traded down to 17,600. We wrote our assets down to that level. You know, Bitcoin is trading at 23,900 right now. We haven't written it up, but I mean, the shareholders understand this. You can see in their reaction to the announcement. The way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it. And then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way. If we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the Three Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic. Right? If you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as a institutional investment grade asset being embraced by regulators, legislatures, and large scale investors. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between the good, the bad, and the ugly. Bitcoin is the good. Right, it's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, many of which are unregistered securities, and this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives, and that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.